Never let a crisis go to waste. You've heard that line before, and today I'm going to explain why that's going on right now today. You see, it's important to look at what we've been told over the last little while, that there is some tough times ahead, that you just have to hunker down and make it through a short period of time. But at the end of the cycle, what happens? Well, in today's video, I'm going to break that down. What's happening right now and what could happen into the future. The second thing I need to discuss is the economic troubles that we are facing right now today. Without this information, we are not armed with what we need to know. And if we don't have that, we are going to be, unfortunately, at risk of dealing with what they are proposing right here and now. I wanted to bring this to you because it really shows us the level of control that we are experiencing. And you may not, really see it, but it's there. The first thing we have to understand is that the recession is incoming or, already here, depending on where you are and what data you're looking at. The economy is in fact slowing down. There is more control from the government. We see that from all sides. I won't get into the details of that, but I think it's pretty clear. There are less services for people in general. You get less today than you might have a few years ago for the same price. Okay, that goes on just different corporations. You used to get that included, but now that's an extra fee. You see it all the time. And then we have higher prices for essentials. You are going to pay those higher prices. And at the end of the day, they will offer a CBDC, a central bank digital currency, as the solution. Perhaps this is tied in with the universal basic income. All of this remains to be seen, but I wanted to make the case for it here in today's video, so let's begin. The United States is doing the same thing that basically all other countries are, and that is really riding up maximum amount of debt and deficits. In the case of the US, $31 trillion. You will see in a year's time, this number is going to be much higher. And essentially what they're saying is this debt threatens the economy. There are many reasons for this, and they suggest a few here. Default, or the potential for default, an inflationary crisis, painful austerity measures, lack of fiscal space, and the potential for a slow decline, which they suggest is the most likely outcome. All of these things could happen. All of these things may be happening. It all remains to be seen what happens at the end of that cycle. The truth of the matter is that you, the individual, pay the price. Look here. This is for Canada. I'm sure you've seen the same thing in New Zealand and Australia and the UK and everywhere else. But in this case, Trudeau saying that next year will be tough. That's a quote. He used that word. And why is that the case? Number one factor is real estate, because so much of people's wealth today is reliant on real estate. And if interest rates go up, well, then you have an issue. You see, it's not about keeping people working necessarily, because their statistics show that unemployment is low. There are help wanted signs many places. The fact is that people don't make enough money to actually subsist when you see what they are getting themselves into. The regular everyday things are too expensive, and at the same time, they need to keep up with the Joneses. They're buying their Mercedes-Benz, they're leasing their Mercedes-Benz. Maybe they have a house in an area that cost $1 million, and they had to get that because there aren't many options. You go down the line and realize that stuff is too expensive. So this is a crisis that is ongoing. And even if the inflation rate comes down, it does not mean that prices come down. We need to have interest rates remain high for an extended period of time to actually clear this out, to have some failures. And that's okay. Corporations need to go bankrupt. That happens during tough times. But in the end of it all, those who are strong survive. That's important. Look here. Steve Apollo's coming recession is seen as an easy ride compared to the past downturns. Oh, interesting. So according to some, this is going to be easy peasy. You're not going to have to deal with this. You could still afford $18 avocado toast because it's going to be an easy one. What they believe is in the soft landing, and that is simply because as things get a little bit worse, they're going to start to actually stop their increasing of interest rates. They're going to hold it there. And as soon as things get real tough, they're going to cut interest rates. Everything is a-okay. Now, while the stock market might react in some way, shape, or form like that, doesn't mean that the economy does. Canada is in recession, and overvalued real estate will be hit hard. That's according to an Oxford economist. You will see these reports all over the place. I'm just happy to pull this up for Canada. I show you US stats. I show you everywhere I can, in fact. But the real estate one is the one that I wanted to focus on because so many places are so heavily reliant on real estate for the values to stay high. And why is that? Well, a lot of people use their home equity line of credit as a bank account. And I've heard countless people say that this is a fantastic thing to do because it's such a low interest rate. Absolutely. But your personal residence shouldn't be seen as a bank account. Maybe you have investment properties, and that's different. You can actually do a cash out refinance, take that, and do something you want with it, right? Because the tenant was paying down the debt. And therefore, if you want to do a cash out refinance, maybe you can grab that and then invest that capital. That's up to you, right? But your own home, why would you want to ever risk that? If you suddenly lose your job, then you have a problem. You see, if you maintain your job and you could still have passive income even coming through, and you didn't have to worry about the economy and everything was always going up and up and up, sure, you can probably take that out because you have that phantom equity that's in your home. But what if not? What if there was a crisis? What if there was a problem that suddenly changed everything? Well, then you would have an issue, wouldn't you? The limits to growth, 50 years on. The gathering momentum for a transformation of the current economic system comes half a century after the Club of Rome think tank published its groundbreaking Limits to Growth report. I don't know if you've ever read this. Many years ago, when the Money GPS was at a very different channel, I covered that here. And, you might remember that or may not. But anyway, Club of Rome, one of these groups that likes to tell the rest of the world what they should do and so on. But essentially what they're saying in this entire article out of CNBC largely goes around this. And that is, we shouldn't use GDP to measure where the economy is at. And to some degree, I could agree with that. But they really put their entire focus on a few things, including what's going on with the climate. This happens to be the new trend. So understand 2023 and beyond, we're going to see more focus on that. Central banks, the World Bank, the IMF, the BIS, they are all technically not supposed to be dealing with climate at all. And yet they're all going to have their own departments, their own reports, their own procedures for what they do related to climate. Probably doesn't make any sense, but that's what they have for us today. And in the end, we get less. Do you understand? As a result of this, we, the individual, are getting less. We will pay more for the services because they're going to deem one thing or another to be wrong. Don't use that. Don't go there. Don't drive your car. You got to do mass transit. You're not allowed to live in that type of house. You have to live in this type of house. You can't have these type of products in your house. You must have these type of products in your house. They have this control now. They are able to do anything they desire. And as a result, people are going to get less. As the economy worsens, people who are heavily in debt often become more reliant on the government for social assistance. The Great Recession of 2008 serves as a prime example of how economic hardship can drive people to seek government-funded assistance. During the recession, many people lost their jobs, leading to a surge in the number of people relying on government assistance. For those who are deeply in debt, social assistance programs such as Temporary Assistance for Needy Families, TANF, Supplemental Nutrition Assistance Program, SNAP, And Medicaid can offer some reprieve, allowing them to stay afloat while they look for employment or other sources of income. In fact, during the Great Recession, the number of people relying on these programs skyrocketed, with the number of people receiving SNAP benefits increasing by an estimated 17.2 million between 2007 and 2011. Overall, as the economy worsens, those who are heavily in debt become more reliant on the government for social assistance. This was especially true during the Great Recession, when millions of people turned to government-funded programs to help them get by. In the end, a central bank digital currency, CBDC, will likely be introduced, enabling vast government oversight into every financial aspect of people's lives. A crisis is needed for there to be justification for the introduction, but also for mass acceptance. And this is where I believe we are headed today. It is very clear, based on what they are saying, based on their reports, their white papers, and all the documentation that I have been reading. If we look at what's going on right now in China, I think it is the perfect example. China's economy is showing increasing strain from the situation that's going on right now. More people have to be apparently, not at this point, but I believe coming to be locked down. They're going to do this again, and I think it's going to be this on and off, on and off. And we don't know what's going to happen. The Chinese New Year is coming up here, so I believe that that's kind of what they're pushing for. They'll do it maybe during that time, or at least people kind of stay home. And then afterwards, if you remember initially 2020, when this did occur, the holiday that would be around, let's say, 3 weeks long, was then extended beyond that, okay? China stops releasing the daily data as the accuracy is questioned. So they're just not going to report it anymore because the total rates had gone up considerably. They're saying, okay, we're just not going to do that. What I'm trying to show you here is that there's a lot of increase in the amount of control that governments have for one reason or another. And what is the big concern is that eventually there will be cause for war. Now you might think, why is that the case? Well, there's always two sides fighting against each other, and sometimes multiple sides, but they need an excuse. There's always a need for an excuse to bring in something, and they'll use anything. They could use something that was provocateur. They could use something that happens on their own terms. Could be a natural thing, it could be a man-made thing, it doesn't matter. But ultimately what we see with China, Taiwan, and of course the United States, in breaking that down into the semiconductors, and what we're looking at with the US and a few other countries that have basically restricted China's access, or tried to restrict China's access to these advanced semiconductors, I believe could be the next level of all of this. So I'm watching that very closely as well. You see the partnership between China and Russia, and this also links in with the resources, because as resources become more diminished, or at least our access to them, well, then it creates tensions on both sides. And when there's a crisis, whether, like I said, man-made, could be financial, it could be anything, right? Some cyber attack, who knows? But that creates an opportunity. Oh, we had some serious problems with our current system. We need to do this new thing because we've got these countries over there that are using it in a bad way. And that's really bad for you, the person out there. That's where the inflation's coming from. It's coming from Russia. So therefore, we got to use this new CBDC to bring that out. They can use anything. And this was just a fantastic chart that I wanted to include related to energy. This is geothermal. I thought it was fantastic. If you're aware of this, you can take a look for yourself. But the point here is that we need to become more independent on our energy however we can. This is important for everybody watching. I'm showing you this right now just as one example. It depends on where you live. It depends on the strategy. Look, I just showed you this one, I think it was yesterday, where an individual was in Sweden. People were asking, how does the individual in Sweden that has, it's not sunny California or Nevada or something, how does that guy get to have a home that's basically paid off in terms of energy? Well, the point was that he has a passive home. If you look up passive home is an extremely energy efficient home that requires very little power. That was the point of that. But anyway, what I'm showing you here is that if we're not, and we become so heavily dependent on this system, well, then we're going to be in big trouble one way, shape, or form, whether that's in the financial aspects, whether that is, just having a job, having income, all these things, really important right now today. I hope you could figure that information out from this video. I tried to highlight that. If you found it informative, right down below, there's a subscribe button. You got to hit that. It's right next to the like button right down there. You hit that, and I will bring some really good information tomorrow. Hit that. See you then. Take care.